Rich with Bitcoin. Maximize profit, minimize taxes. Must know hacks. Voiceover script. Picture this. You're sipping coffee, smug as hell, while your buddies drown in a sea of Bitcoin receipts, scrambling to dodge a tax bill that could choke a whale. Sound too good to be true? It's not. Right now, you're about to unlock the secret sauce to tax-efficient Bitcoin buying. Hacks so slick they'll keep the IRS off your back and your profits in your pocket. We're diving deep into the tax traps of frequent trading, the epic FIFO versus LIFO showdown, and the reporting tools that'll make you look like a crypto genius. Stick around, because these must-know tricks could save you thousands, and turn your tax nightmare into a victory lap. The tax trap. Frequent trading is a profit killer. Let's rip the band-aid off. If you're trading Bitcoin like it's a slot machine, you're begging for a tax smackdown. Every buy, every sell, it's a taxable event. Stack up those trades, and you're stacking up a bill that'll make your eyes water. Day trading? Brutal. Those short-term gains get taxed at your ordinary income rate, up to a savage 37%. Meanwhile, hold that Bitcoin for over a year, and you're in long-term territory, where the max tax rate drops to a silky 20%. That's the difference between bleeding cash and keeping your stack intact. Here's a gut punch from the real world. Alex, a trader in 2021, crushed it with 100 Bitcoin trades, pocketing $50,000. But because he flipped coins faster than a street magician, he got nailed with a 35% tax rate, $17,500 gone. His pal Sarah? She held her Bitcoin like a champ, sold for the same $50,000, and paid just 15%, $7,500. Same profit, but Sarah's $10,000 richer. Moral of the story? Patience isn't just a virtue, it's a power move. Frequent trading might feel like you're winning, but the taxman's the real shark circling your gains. Want to outsmart him? Let's talk accounting. FIFO versus LIFO. The accounting smackdown. You need to win time to geek out on some tax ninja moves. FIFO and LIFO. These aren't just fancy acronyms. They're your ticket to slashing that tax bill. FIFO, or first in, first out, assumes you sell your oldest Bitcoin first. LIFO, last in, first out, says you ditch the newest coins. Depending on Bitcoin's wild price swings, one could save you a fortune, or leave you crying into your keyboard. Here's how it shakes down. You snag one BTC at $10,000, then another at $50,000. Later, you sell one BTC for $60,000. With FIFO, you're selling the $10,000 coin, so your gain's a hefty $50,000. Oof, big tax hit. Switch to LIFO, and you're selling the $50,000 coin, cutting your gain to $10,000. In a high tax bracket? That's a game changer. But here's the rub. The IRS loves FIFO, it's their default. Want LIFO? You've got to prove it with records tighter than a vault, dates, prices, every nitty-gritty detail. Slip up, and you're back to FIFO, overpaying like a chump. So, which wins? It's a chess match. If Bitcoin's climbing like a rocket, LIFO shrinks your gains on paper, keeping taxes low. If prices are bouncing like a yo-yo, FIFO might sneak you a better deal. The trick? Pick a lane and plan like a mastermind. Because outsmarting the taxman isn't luck, it's strategy. And speaking of strategy, let's unleash the tools that'll make this a breeze. Reporting tools. Your crypto lifeline against tax chaos. Tracking Bitcoin trades by hand? That's a one-way ticket to insanity. Buys, sells, swaps, staking, those micro moves pile up faster than you can blink. Enter reporting tools, the unsung heroes that'll save your sanity and your profits. Think CoinTracker, Coinly, Zen Ledger. These bad boys sync with your wallets and exchanges, crunch the numbers, and spit out reports the IRS can't argue with. No more spreadsheet meltdowns. Take CoinTracker for a spin. It hooks into over 300 platforms, tracks your cost basis like a hawk, and calculates gains with FIFO, LIFO, or even specific identification if you're feeling extra. Bonus? It churns out Form 8949, hand it to your accountant or slam it into TurboTax, done. But it's not just tax season magic. These tools flex year-round, showing you which coins to sell to dodge big taxes or harvest losses to offset gains. Pro move. Don't sleep on this. Set it up now, link your accounts, and let it hum in the background. When April hits, you're chilling while others sweat bullets. And don't think you can dodge the IRS. They're onto crypto like bloodhounds. In 2023, they mailed thousands of "you're busted" letters to underreporters. Skimp on records, and you're toast. Tools like these? They're your armor. Putting it all together, your blueprint to crypto riches. So, how do you stack Bitcoin wealth without the taxman snatching half? It's simpler than you think, but you've got to play smart. If you're a long-haul legend, buy and hold. Let those gains ripen and bask in lower rates. Can't resist trading? Lock in an accounting method, FIFO or LIFO, and own it. Either way, arm yourself with a reporting tool to keep your books pristine. Because in this game, the line between crypto king and tax casualty is razor thin, and it's all about preparation. Take Alex and Sarah again. Alex's frantic trading left him gutted, Sarah's chill vibe kept her flush. You're not here to lose. You're here to win, big. So, next time you're eyeing that Bitcoin chart, ask yourself, am I playing for profit, or am I playing for the IRS? You're moved.